What's going on, traders? Welcome to the channel. I'm John. That's Groot, the stonkifying trader. Nah, that's bad. That's Groot. We trade options here. All right, so big question. This is kind of an emergency upload. Very minimal editing, I think, is going to be happening because this is important. Should you be buying AMC options right now? We have doubled, like basically tripled since last week. It is wild. I'm going to show you a couple things, and also I made some plays in this with options, so I'll explain my reasoning tied to that. But let's check it out. So you can see AMC kind of forming like a wedge pattern. We've been up and down. Volatility has been wild, but nonetheless, this also does affect options pricing. So I'm going to stress this: do not mess with money that you cannot afford to lose. Okay, I'm not a financial advisor. This is not advice to you. This is just showing what I've been doing, why I'm handling my risk the way I am, and why I like the strategy that I utilize when I trade. So let's dive in really quick here. Okay, so we are in Tastyworks, and let's just look at the AMC options chain just so you can get a rough idea of what is happening. Now, I'll explain this to you here. The monthly contracts, they're the third Friday of every month. So that's like June 18th here. Everything else is weekly, so you'll see these W's here. I'm going to start on the monthly first, so we can see that option chain, and then we'll work on the weekly, which is the most recent trade going on. So here is the setup. If you're looking at these option strike prices, the 70 plus just got added like yesterday or something, and you are now seeing they're a little high. If we went to the very first call option that's available, so I'm going to the 73 strike. The stock is trading around between 66 and 67, so it's about 66.42 right now per share. If you're looking at the 73 strike, you're saying, hey, we are going to hit this level or higher by expiration, which is 16 days from now, June 18th coming up. Now, if I was to click this, you're going to pay $26.80 for that one contract. This multiplier is 100 since it's 100 shares. So this is actually $2,680 if you want to purchase this one contract, and it's not a guarantee. What can happen, you're looking at something called Theta Decay. You would lose about $77 to maybe $100 a day if you purchase this. Your max loss would be what you paid there, but your max profit, infinity, baby. But we never know. So you got to always manage your risk and be aware of that. Let me get rid of that. I'm going to actually view this option in a chart so you can see. Yeah, so this came out yesterday. We went as low as about 150. So that was $150 to buy this contract. It has now bolstered itself to about 2,600. That's a massive gain there. 2,600, what was it, 150? Gosh, that's like 16 times its value. That's crazy. Really good if you bought it yesterday. Today, I don't know. You'd be buying, a pretty expensive thing there. However, that's the way I view this. And let's look now at why I picked a certain position. Now, if we go back to the AMC weekly, and this is expiring in 2 days from now, June 4th, you're seeing something very similar. The pricing has pumped significantly. So we're seeing the same thing where your trades have kind of gone higher. The options values have gone higher because of their perceived value. What I'm going to actually do is take advantage of that pump, and I'm going to do that by selling premium, and you can do this to basically collect income. And so I'll show that trade. I did it on Robinhood, but I'll show it here on the Tastyworks platform just for a minute, and then I'll go to Robinhood to show you the exact. But basically what I did, puts are on the right, calls are on the left. I actually ended up shorting a put, making a bet to the upside. So when you sell a put, you're betting to the upside. If you buy a put, you're basically betting to the downside. So keep that in mind. That exists in this type of market and with options, and it's a very powerful thing. So I actually sold at the 48 level, and 58, and I bought 10 points lower. So as an example, I went over to this 58 strike and I said, hey, I'm going to sell this put and you will give me a credit. And then what I'll do is I actually went out further and created a spread. So 58 short put, and then I bought the 48 put. So instead of shorting, I bought this, and now I've created a spread difference between this 10 points wide right here. And what you'll see is a couple things there. I actually bought it at 590, and I bought two of them, and I'll just show kind of the numbers here so you can get an idea. And basically what this was is, now I'm making a bet to the upside. I'm betting that we do not go below $58 a share, and if so, I'm gonna have really good profits. It's gonna look great. And then what happens is my max profit will be 1,180, and that's in 2 days. This is almost like $600 a day right now. And the max loss here would be $820. So I'm basically looking at a risk reward that is inverted. Usually you're getting really low profit or kind of a higher max loss. This is inverted, and that's a really good sign. You're going to see this theta decay, which is what we will capture. And right now it's at about 100 a day. But tomorrow that's gonna double or triple, and it'll go to like 200 or 300 a day. And then by the end of the day, if we're well above this level, these options will basically expire worthless, and I pocket $1,180. So let me show you a couple other things too. When you get kind of a pump like that, that's way higher, your probability of profit increases very significantly. But I will show you on the other setup here just so you can see what makes sense here. So let's go to AMC in Robinhood, and right now you can see AMC, man, $65 or so. We're up 99% today. And I'm gonna go to AMC options, and what I did is two things. So you got to go to the put, and we're gonna start off with our sell, and I'm on the correct contract date, June 4th, which is 2 days from now. So I got 2 days to expiration. And this is the opposite. You go down on the option chain here to go lower. So you see I have that 2 already, -2. So this means I shorted a put to go higher. I'm betting that AMC goes higher. You can see AMC price as it goes higher, I'm in the green, right? So AMC at $60, $70 a share, I'm in the green, looking good, but I got to finish out my spread. So I'm now going to go up here and hit buy. And as I go lower, I go to the 48 strike. I put this 10 points wide, and this created a good setup for me. So what I did, it was two of these, and it was at $5.90 per contract. So that's 590 bucks each times two. That gives me that max credit at 1,180. And just to show you the break even and the profit and loss diagram chart, this is kind of how it looks. So in essence, we started at $58 a share. If we are here and we expire in 2 days, I get max profit there at the 1,180. And then if we go lower, say the stock goes lower, it's trading at $65, $66 a share now. If it goes to 52.10 in 2 days, that's my break even point. I basically net zero. It's a wash. I don't make any money, and we're good to go. We just reset, pick our next trade. But that's pretty good. That's a big difference from where we're at now, about $15 in share price difference. And then as we go here, if we go lower, I'm looking at a max loss at the $48 level. So if AMC basically cuts itself almost in half or so, or it drops a lot in value, then I'm looking at my max loss. So I risked some money and I lose $820 on this trade, but I'm risking $820 for the potential to make almost $1,200. I'm very happy with that. It was a trade that was worth putting on. And basically what I'm doing is I'm selling the lottery tickets. So people who buy puts or buy calls, I'm selling those to them. And I am a big thinker that AMC is going higher. That's kind of my thought and my bias. But just the way the charts look, it's each of the candles that go down are actually quite low on volume, except this last one that just looks like it dropped very heavily. But you're going to see that what's going on is there is definitely a lot of manipulation going on, and it reminds me exactly of GME. There's the same players involved in terms of people holding the stock, and then the hedge funds. It's very, very similar. So it seems like it's like almost repeating history. So I'm curious to see how this goes. But that is the one thing I thought was important. People were asking about options and how they look. Now, here's the thing. You could buy stock there too. You could buy stock at 66.22 or so, but the problem is that when you do, you're making a bet that we go much higher from that point in time. And if it doesn't, then you're losing a little bit of money, but if it does, you're great. However, what I'm doing is I'm trading in the margins. I'm kind of like giving myself a margin of safety where I said, hey, I'm not going to lose money unless we hit $48 a share or $52 a share is when I start losing some money. But I won't hit my max loss in this trade until we're below $48 a share. However, if we in 2 days are above the $58 a share, I'm making 1,200 bucks. So, that's really good. But definitely, if you do not understand options, don't follow. Please, 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 don't jump in and don't do risky stuff until you kind of get a groove and start understanding what's going on. The market is always there. It is always there, guys. Like, you do not need to lose a car or lose a house or lose, a significant other or something just because of money. It's just money. It's just money. Seriously. The markets will always be there. You do not need to make, crazy risky decisions. But check it out on my channel. My goal is to teach the mindset, the way that I trade options for income, and I'm very transparent. I show you those trades and the way that you can kind of keep on utilizing that to your advantage as things go on. So good luck. I'm holding strong. I hope everyone does well. Let me know what trades you've got if you are trading AMC, and then let me know what questions you got. I'm always happy to help out. But this next video will explain the setup for put credit spreads if you're interested in options income.